Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode,
I think we do need to delete entire agencies.
another day, another Elon Musk headline, or two. How he's pushing efficiency in the government, and why he wants OpenAI, the company he co-founded, to stay a nonprofit. OpenAI investor Geoff Lewis.
I feel like the world should be big enough for these two entrepreneurs to both coexist.
And President Trump announces reciprocal tariffs. Today, Jeff Currie is Carlyle's chief strategy officer of energy pathways, and he argues steel and aluminum tariffs might not be a great idea.
If you think AI is power intensive, aluminum's a whole different world. It is 6 times more power intensive than AI data centers.
And onshoring aluminum, also not a good idea.
This would be incredibly disruptive to power grid. There's a reason why it was outsourced to begin with.
It's Thursday, February 13th, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We're here.
Made it to Thursday.
We did.
Market survived yesterday.
It actually did better than we saw at 8:30 when those numbers came out.
Let's say what's going on overnight, because it's pretty interesting. Alibaba's chairman, Joe Tsai, speaking at a summit in Dubai. He confirmed a report from The Information earlier this week that Alibaba is now partnering with Apple to roll out AI for iPhones that are sold in China. Those stocks jumping on the back of that news. And Tsai saying that Alibaba could offer Apple a local partner to help it navigate the regulatory environment as well and localize its AI. So you're seeing a big jump. Frankly, I mean, I think I imagine it's going to help both of those guys.
Yeah, because that's been a big question for Apple, whether
Exactly.
they'd be able to continue to compete in China.
And if you have Alibaba, the question is whether Alibaba's AI is as good as DeepSeek or any of the others. And there are a bunch of others that I think actually are a little bit ahead, frankly, of Alibaba. Elon Musk speaking to the same conference in Dubai overnight via a video link. Here's what he said when asked whether the changes he's implementing as part of the Trump administration will last beyond Trump's term.
I think we do need to delete entire agencies as opposed to leave part of them behind. Because if you leave part of them behind, it's easy. It's kind of like if leaving a weed. If you don't remove the roots of the weed, then it's easy for the weed to grow back. But if you remove the roots of the weed, it doesn't stop weeds from ever growing back, but it makes it harder.
I said a future administration could increase bureaucracy, but it would be from a much lower baseline after his department's cuts are implemented.
And President Trump held a call with Russian President Vladimir Putin yesterday. He described it as productive, with both leaders agreeing to visit each other's countries and to open immediate talks to end the war in Ukraine.
I think we're on the way to getting peace. I think President Putin wants peace and President Zelensky wants peace, and I want peace. I just want to see people stop getting killed. We're very far away from that particular war, but that's a vicious war.
President Trump later posted on Truth Social that he spoke to Ukraine's President Vladimir Zelensky, who said he also wants to make peace. Trump said Zelensky will meet with Vice President Vance and Secretary of State Marco Rubio. That's in Munich tomorrow. The Wall Street Journal reports that China has been pushing to play a role in facilitating peacekeeping efforts and has offered to hold a summit between Trump and Putin. Trump told reporters that he and Putin would probably hold their first meeting on that issue in Saudi Arabia. In regards to China being a part of this, there are some U.S. officials in that Wall Street Journal report who said, we don't know, because of the close relationship between Putin and China. Maybe not.
Thank you, but
no thanks.
We're good.
Yeah.
We're talking.
It would be great to see an end to this war. I think there have been questions from European allies who didn't get a heads up about this. It was posted on Truth Social before they heard anything, and Europe's position has been that Ukraine should be involved in any discussions on this.
The criticism I heard yesterday was that just sort of the president talking now to Zelensky about what you need to do is sort of giving up the ghost of what you're willing to do too soon before you've even told, it's almost like saying to Putin, okay, you did all this already, and that's a given that you've done this. So let's start from here, and maybe it shouldn't be done.
Well, and Hegseth made some comments yesterday.
Yeah.
Defense Secretary Hegseth made some comments that, look, it would be crazy. They're not going to be able to be in NATO. He also said, which is probably a given. But the second part was that the 2014 land that they took would be there too, and that it's just not giving Ukraine the best leg forward in terms of starting a negotiation on that point too.
Cheese will be next.
Coming up on Squawk Pod, the latest update on Elon Musk's bid for OpenAI. He says he will retract his $97.4 billion offer if OpenAI agrees to remain a nonprofit. We'll hear from OpenAI investor Geoff Lewis after this.
It is clear that OpenAI has become, in the United States and beyond in the Western world, the default, certainly with consumers and with enterprises, it's the default AI product. So they do seem to be winning.
Welcome back to Squawk Pod.
You're watching Squawk on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernan and Becky Quick.
New this morning, hence why it's called news, because that's why we're telling you. Elon Musk says that he's going to withdraw his $97.4 billion bid for OpenAI as long as the company remains a nonprofit. Joining us now, OpenAI investor Geoff Lewis. He's a founding and managing partner of Bedrock. Was it a real bid? That there are reports aboard, but it's not even a formal offer.
Well, it's not a formal withdrawal either. I'm looking at this.
Right, but it's neither. It's neither a formal bid nor
if you do this, then we will withdraw.
What's he want? What's behind all this?
I'm not a mind reader, but he's a brilliant entrepreneur. He's one of the most important people on the planet, brilliant innovator. So I certainly wouldn't underestimate him. I'll tell you that, Joe. So
were you watching yesterday? You saw the other Joe, the richer Joe Lonsdale. I think the mission was that it's supposed to be open, and it's not. It's done amazing things. If Elon would be able to buy it, it'd be a great thing for the world.
Look, Joe's great. I like Joe. I'd say that as a venture capitalist, you always back the entrepreneurs that you've invested in. Joe's an investor in Elon. I'm an investor in Sam. I think they're both phenomenal entrepreneurs. I support Sam running OpenAI. I respect Elon a lot. I feel like the world should be big enough for these two entrepreneurs to both coexist, and that it doesn't need to be zero-sum.
What do you think's really going on then? Do you think that Elon can see that he's behind, or?
I mean, look, xAI is a formidable product, and they're investing a lot of capital. They've got some great engineers working on it, and I would never underestimate anything Elon's doing, but it is clear that OpenAI has become, in the United States and beyond in the Western world, the default, certainly with consumers and with enterprises, it's the default AI product.
But you can't necessarily take it and go from a charitable situation to an open product that is for profit. And I mean, this is one page. This is not a very deep lawsuit or anything that goes into it. But it says we're violating the charitable obligations. And there are already attorneys general in California and Delaware that are looking into this. Is this a checkmate sort of move?
It's been a capped profit. I don't think it's a checkmate move. It's been a capped profit for many years. I don't think Elon had major problems with this until it started massively working. I didn't hear anything from him in the public sphere, at least prior to the launch of ChatGPT in 2022. So it seems like this has only become an issue for him as it started to work. And I think it's for the courts to decide, can this conversion go through?
Let me posit an idea with you.
Yeah.
The idea being that last week, it appears that he's losing in court to try to prevent the for-profit piece of this from happening. The judge says it's a, quote, stretch. The case is a stretch. He says to himself, okay, we're going to now try to make a bid for it, knowing relatively full well that the board's going to say no, but I'm going to put a floor on the price that the not-for-profit ultimately has to get, knowing that the attorney generals in Delaware and California, their only real responsibility as that transaction relates to that transaction is to say that the not-for-profit ultimately has to get fair value.
Right.
And one of the ways to get fair value would be to look around and say, well, this guy's offering this, so that would establish fair value. I have a view, which is actually that nobody's going to look at the metric of that offer, because they're going to say there's no credibility in truth to the actual price of that offer, given all the other lawsuits and other things. They're going to say, we know this is all part of this other effort. What do you think of that framing?
I think that's a valid hypothesis. I think Elon's got a syndicate of investors behind him, Joe from 8VC, Gavin Baker. So those guys might be able to help Elon get the $97 billion or something, and who knows?
I say the AG discounts that. Discounts their involvement because of the ecosystem that most of the people who are involved in this, as you said, you back the entrepreneur. They're all invested in all of the other assets that Elon owns, largely.
Yes.
And so they say to themselves, you know what? It costs me nothing if he doesn't win. And by the way, I get brownie points, and I'll be able to get into the next round of funding for SpaceX and everything else if I do this. And if he wins, he'll figure out a way to make me whole in the same way that even if in the X case, or Twitter now, it didn't totally work out, or it hasn't worked out completely, but he's given them 25% of XAI. I mean, there's lots of moving parts that you can move around.
Yeah, I think that's a sound theory, Andrew. I think for me, this all just underscores how impressive what OpenAI has achieved over the past few years is. I mean, the fact that all of this maneuvering is happening to try to take control of this organization is really unprecedented in business.
But what do you make of the fact that of all of the companies, so many others are better capitalized? So Amazon's better capitalized, Google's better capitalized, Microsoft, if you think they go on their own eventually, better capitalized, and that Sam is going to have to continue to find funding over and over and over again to make this work.
It's getting less capital intensive in some ways. Certainly on the training side, it's getting less capital intensive. I think a lot was said. President Trump's first full day in office, the Oval Office, was President Trump, Sam Altman, Masa from SoftBank, and Larry Ellison. And those businessmen have access to a lot of capital. So I'm not worried about Sam's ability to keep capitalizing OpenAI.
Okay, Geoff, thank you.
So there's room for 2. There's not enough room for 10? How many?
There should be room for dozens. And look, I mean, Elon is transcendent. I believe Sam is a young, emerging, extraordinarily talented entrepreneur. And I really hope that we can find room on this planet for both of them to coexist. It feels like we should be able to do that.
Do you think there's a way to settle the situation?
I believe there is, yes.
What would that take?
I think it comes down to those two individuals. I think they have to figure it out.
Does Elon get a stake in it? Is that he's still mad because he invested the money?
Look, from my vantage point, he absolutely should. He did co-found it. He came up with the name. He was instrumental in getting it started. I don't think anyone's debating that. I don't think Sam's debating that. I think if Elon wanted a stake in it, I think OpenAI would be open to accommodating that. That's my hypothesis.
Mm-hmm.
Okay.
Thanks, Geoff.
Thank you.
Thank you all.
Up next on Squawk Pod, the Consumer Price Index, Producer Price Index, tech earnings, and tariffs. Carlyle's Chief Strategy Officer of Energy Pathways, Geoff Currie, says they're all interrelated through commodities.
In that hot inflation report yesterday, it was things like transportation equipment, which are what? Metal consumers, where you actually saw the inflationary pressures.
You're listening to Squawk Pod with Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Here's Becky.
President Trump imposed a 25% tariff on steel and aluminum imports earlier this week. For more on the potential impact on commodities, the energy sector, and the markets, we want to get to our next guest, Geoff Currie. He is Carlyle Chief Strategy Officer of Energy Pathways. And Geoff, it's been a while since we've gotten to talk to you. First of all, how are you doing?
I'm doing well, Becky, and it's good to see you. I'm glad to be back here talking about the commodities. So.
Yeah, there's a lot to talk about. Steel and aluminum prices, we've watched what's happened with the stocks. I guess the commodity is a more interesting thing to kind of take off. Obviously, American companies, their stock prices did benefit from the tariffs that are going to be imposed. What's it been doing to commodity prices overall?
Well, when you look at like aluminum, it's priced it in almost entirely in places like the Midwest premium for LME aluminum. I think the point you make, like Alcoa, it really didn't price it in. So the question is, why did the commodity market price it in and Alcoa didn't? I think it simply goes down to 3 factors. One, it's going to take 2 to 5 years to bring on new supply. We think the deficits are so large that the persistence of such a large tariff is probably not sustainable. Second thing, I like to point out this out. If you think AI is power intensive, aluminum's a whole different world. It is 6 times more power intensive than AI data centers. So bringing it onshore in an environment in which AI data centers are already expected to consume any excess power, this would be incredibly disruptive to power grids. There's a reason why it was outsourced to begin with. And then I think the third point to keep in mind is, big tech missed earnings last week because the growth in cloud data missed their targets. Why? Because they didn't have access to things like transformers. What are transformers? They're just big chunks of metal. So if you put tariffs, disrupt these supply chains, it just aggravates that situation. I think that's why, Alcoa didn't price it in, but the commodity markets have fully priced it in over the next 2 to 3 quarters.
We've got the inflation numbers that we saw yesterday on the consumer level. Today, we're getting producer prices. How does this play into producer price inflation? Not that we're going to see in today's print, but let's say 3 to 6 months down the road.
It's very significant. I mean, when you look at, the rises in, take that Midwest premium for aluminum, you're up 25%. It priced in those targets perfect, or the tariffs perfectly. You look at COMEX high-grade copper, it's up 10 to 12% right now. These are major inputs into basic production across the supply chain. And I want to point out, in that hot inflation report yesterday, it was things like transportation equipment, which are what? Metal consumers, where you actually saw the inflationary pressures. So, I think this is very significant.
Geoff, we've talked about how hard it is to try to move away from fossil fuels and how long it's going to be. And, it finally made its appearance in the Wall Street Journal, an op-ed piece on Landman, out of Hollywood. There's actually something that shows how essential fossil fuels are to this world that we've built and the way you do it. But one thing that becomes clear, even why, it's just a TV show, but they do point out the oil industry likes $60 to $80 oil. If it's under 60, things become very dicey for the producers. And it really matters that at like 70, 75, that's perfect. If we drill, baby, drill, like President Trump wants to do, and Doug Burgum, and we keep hearing about it, how that's going to be a panacea and like our golden ticket to everything good in the world. Can't that be self-defeating if we produce too much, or if we overdo it? Won't prices collapse and then we go through a bad spell?
For one, I don't think you can overdo it. I mean, these producers have made it clear. Regulation is not the constraint on their ability to raise production right now. But I want to go back to your point about low oil prices being bad for the U.S. This is not 1970 United States. This is 2025 United States. It produces more oil than Saudi Arabia and Russia combined. It's 20 million barrels per day of oil production. Oil, as you point out, oil prices go down below 65 or 60. U.S. has a problem. If you think about, even on the upside, it may hurt the consumers in places like Chicago and Michigan temporarily, but it will benefit them in the longer term because you get more capex, more investment. So when we look at the U.S., it's a benefactor from higher oil prices. So you're spot on. But I think about those fears of prices coming down and creating a due to drill baby drill. U.S. production hit 13 million barrels per day on the eve of COVID. It dropped down to 10. It came back to around 13.2. So between 2019 and today, we're still roughly 13 million barrels per day on liquid oil production. You get to the 20 by adding in NGLs and other types of liquids, but black crude oil, it's roughly 13. I think you're going to really stress the system to get it above 13.4, 13.5. So when we think about the ability to drill, baby, drill, even the administration has toned down the barrels of production and called them barrels of oil equivalency to be able to address it as gas as opposed to oil.
I don't know what all that means then. So it's kind of a pipe dream then that we can't produce more.
Yeah, I think it'll be really difficult to add. That their target is 3 million barrels per day. And that's the reason why they quit calling it 3 million barrels per day and called it 3 million barrels of oil equivalency per day.
So what happens with Canada if they decide to put tariffs on the energy that they are sending us?
Well, I think one, when you look at the ability for them to redirect oil out the West Coast through Vancouver into places like China, you're already seeing every effort to move those barrels elsewhere in the world, which is creating shortages of products in places like the mid-continent. You look at product markets around the world, they're at very, very tight levels at this point right now. So we're starting to see barrels being redirected. Not only do you have the tariff situation in the U.S., but you also have, Russian sanctions biting, Iranian sanctions biting. Overall inventories are the lowest levels they've been since, going back decades. So market's tight. You can see it in the front of the forward curve, which suggests, the risks are still skewed to the upside right now. The question you're probably asking, why doesn't the price it in
exactly
right now?
Why hasn't gone in? Right.
Investors have no interest in coming to this space. And when we look at, the amount of leverage in the market, given where interest rates are, the cost of capital, people shun these markets, all of these markets, whether if it's aluminum, copper. The old economy is still very much out of favor right now. And you have to get expected returns high enough relative to, say, like big tech before you're going to see capital move in here. Another way to say it is, in the 2000s, when we got bullish on oil, the market would price it in because it saw the upside. Today, it's not going to price it in until you drive over that pothole.
Geoff, thank you. Really good talking to you.
Interesting.
It's a new place,
Thanks for having me.
It's a new job.
Carlyle, we've had him on since.
Yeah, we've had him on since.
But not a while.
It might have been under the, I don't know where it was.
It's been a while since he's been on.
It has. It's great. It is good to have him on.
Yeah. We missed you, Geoff. Thank you.
And I listened to all of them.
I'm still trying to put it back
figure
together.
Figure it out now, too.
That does it for Squawk Pod today. Thank you for tuning in. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin on CNBC every weekday morning from 6 to 9 a.m. Eastern. If you want the highlights of that 3-hour TV show, you can always catch them right here on Squawk Pod. All you have to do is follow us wherever you're listening now. We'll meet you right back here tomorrow. Have a good day.
We are clear. Thanks, guys.